You're watching Taking Stock. I'm Bruce Whitfield. We're at Investec with, I want to call him the new chief executive, new-ish chief executive. He's been in office for months now, having taken over from Stephen Kosef as the chief executive. Stephen Kosef with the business of Investec for 40 years. So there are long, deep legacies at play with Investec. One of the big features of Investec is that this year it was supposed to be broken into two pieces. One, the local and international banking businesses of Investec. The other, the asset management business of Investec. But it hasn't happened. Is it still on the cards, Fani Titi?
We are on track with the demerger. It's taken us a bit longer than we had anticipated, but we are definitely on track. We did say to the market a few weeks ago that we expect to complete the demerger by the end of the current financial year. So March 2020, we expect to have completed the demerger, assuming, of course, that our shareholders will approve the demerger. Why
is it so complicated? You've got a banking business, you've got an asset management business. The common thing is a zebra. What is the great big complexity of breaking it up?
Look, the two businesses do not have a lot of linkages between them. So operationally and strategically, it is easy to understand that you can break them apart. Obviously, Investec is a big company and a player in the South African market. So we've had to go through to the regulators, work with them to process the demerger and its impacts. And we've been able to get to a point where they've given us the approval, and on that basis we are able to move forward.
Have you had much resistance then from regulators in terms of taking a business decision?
Look, they have regulators have a number of issues that they look at. They look at the sustainability of the two independent businesses post-demerger. They would look at the impacts on the different markets, in particular the impact on South Africa. So we were able to reach the same level of satisfaction around the demerger. That's why we are moving forward.
It's a really interesting business because for years we've seen this exponential growth of asset management, and the bank has sort of muddled along, and it's had quite a lot of volatility because the bank, by nature of a bank, takes risk in lending money, and Investec has always been quite aggressive in its approach to lending money. It'll take risk where others fear to tread. I mean, it does create a fundamentally new investment proposition, does it not?
Look, the two businesses have different economic fundamentals. Asset management, you gather institutional money to invest. You do not take risk off your balance sheet, as it were. Whereas on the banking side, as you said, you do have a balance sheet and you lend out money. On the one hand, you advise clients to take risk and you back them. Over the last 10 years or so, post the global financial crisis, banking businesses have faced a swath of regulation, and obviously we have had to see a significant level of deleveraging, both in economies that were affected by the global financial crisis, but clients also have had to deleverage, and new regulations have made risk-taking much harder. So it is understandable that banking businesses, not only in South Africa but across the world, would have seen muted returns, as it were, just given the level of regulation. Higher levels of capital have been required, higher levels of liquidity have been required, a beefing up of risk management processes. So it's been a sea change with respect to how banks are managed and what returns banks can generate.
Banks require scale. I mean, the bigger you are, generally the bigger gorilla you are in the room. In South Africa, you are a substantial player. In the UK, in a sea of competition, something like 300 banks in the UK now. There's been a lot of deregulation in that environment. Is it a worthwhile proposition to stay there once this demerger happens? Do you keep a bank in the UK?
You are right in saying that banks do require a level of scale. However, with Investec, even though we are the fifth or sixth largest bank in the country, depending on the metric you use, we remain very niched. We are not everything to all people. We work in specific markets, we target specific clients, and we try to understand those clients and serve them in a fairly specialized way. That's why we normally call ourselves a specialist bank.
Sure.
We have asset management, obviously, and wealth management. So we always niched. Our approach to the UK is similar. We've identified certain specific markets in private banking, in corporate lending, in global markets, and obviously also on the wealth side of the business. We think we have specializations we can offer. We think we can be niched. We are small, we are nimble, and we are able to attract a number of clients that we are very relevant to. So we are building scale in the UK on the basis of the niches that we have chosen.
And in South Africa, is South Africa wealthy enough? Are there enough wealthy individuals in, again, a very competitive space, because everybody wants the upper crust. There's an old joke about the upper crust. It's just a bunch of crumbs held together with a bit of dough. And that's a small group of people, and we're seeing a lot, anecdotally anyway, an increase in the number of those people who are migrating. They're going to other places. They're taking their capital with them. They're frightened of the future. That's your market. Those are the guys you serve. Are you fearful of the future from that perspective?
We obviously do serve the top end of the market, and we've been very successful over a long period of time, given our specialization and focus on that market. We understand the high net worth individuals that we serve, both from a banking perspective and a wealth perspective. There is obviously old money, which people are looking to preserve, and generally when you have made money, you try to diversify. So internationalization of assets is a natural phenomenon, irrespective of the market in which you are based. If you're an American, you will look to diversify slightly away from America.
To get to the point, though, are you fearful of the future with your markets, the most vulnerable to migration at the moment?
Look, there is a level of internationalization, both in terms of assets and people moving because they are looking for greener pastures in other places. But there is also a class of people that are coming into money as a consequence of the progress that has been made through democracy and economic transformation over the last 20 years or so. But there is, though, a concern that if we do not get the economy growing, or we do not create a future where people feel they have a stake in that, those who have skills, those who have capital, may well look elsewhere. So I think the country has to address the security of those with money and those with skills as we move forward.
We'll talk more about that perhaps in just a little bit. Comes full circle then back to the unbundling of Investec Asset Management, the separation of the businesses. As South Africa's part of this global economy, doesn't it make sense to keep everything together? Simply because you get people who make lots of money, you advise them in the bank, they put their assets into the asset management business, and it's all kept in the same family. Once the split happens, it leaves the family, potentially.
The asset management business is institutional in nature. So within the bank and wealth space, we obviously have, we bank individuals, we also manage their wealth, and we also bank corporates. As I said earlier, the linkages between the two are not strong enough to justify strategically keeping the businesses together. Post the demerger, the bank will continue to have very leading franchises in private banking, corporate banking, investment banking, and wealth management. We have deep relationships with our clients, and we have people who have a culture that is very assertive. We will always go out into the market, serve clients, and seek opportunities. So the strength of our balance sheet, the strength of our liquidity, the strength of our culture and our people, and the depth of the client franchises that we have in bank and wealth give us confidence that we will be able to prosper post the demerger.
Who keeps the zebra?
Obviously, the bank and wealth business will keep the zebra.
Well, it's not that
we will
obvious.
retain.
The zebra is ubiquitous. You go around London, it's on the taxis,
Absolutely.
It's on the London Underground, it's on the sports fields. It's such a strong and recognizable brand, and it's a standout brand. So the asset management business is going to have to give up the zebra.
They will be rebranding, yes.
give them a giraffe or something. We're talking about Investec. We're talking about the divide between Investec Asset Management and the banking business of Investec with the chief executive of the company. His name is Fani Titi. The separation was meant to happen this year. It's been kicked down the road to the end of the first quarter of 2020. More on that, the culture at Investec, which has changed. Nowadays, if you look around behind me, not everybody's forced to wear a suit. Things are changing at Investec. Investec, as Fani Titi puts it, always assertive. Some people call it aggressive. Now that the founders of Investec have all retired, do we see a culture change coming in with the Demerger as well? In a moment.